Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and today I'm joined by Steve. How you going, Steve?
Hey Ollie, good afternoon everyone. I'm great, especially after that miracle win by the Raiders. What can I
Oh,
say?
mate, we love a game of Mudgee, don't we? Okay, so moving on to the agenda for the week. For any of our long-time viewers, this will look pretty familiar, but for any of our new faces here, this is how we usually do it. We'll start off by having a look at the previous week and putting a highlight on some of the major events and having a look at the key themes and how this moved prices. We'll then move into the week ahead, where we'll put a spotlight on some of the key events and analyze how we think those will fit into our key themes and how we expect this to move the markets. We'll then move into our technical corner. We'll put a spotlight on a couple different markets and analyze them using a top-down analysis. And lastly, we'll move into our Q&A section, where Steve and I will answer some of your guys' most commonly asked questions from the week prior. So starting off with the last week, on your guys' screen, you'll see a list of your top traded products from the week prior. I don't really think there's too many surprises. I don't actually think there's been any changes in there, but I do love the fact that we do see a few of the US indices in there. I think, as we all know, they've been on a pretty impressive run recently, so it's not really too much surprise. But how about you, Steve? You see anything in there noteworthy?
No real surprises. I mean, obviously the indices have had a real good run, so yeah,
They've been
definitely.
holding all the headlines.
Yeah,
Too easy. All right. So moving into last week, just wanted to start off. We'll talk about the RBNZ cash rate, where they have lowered their interest rates by 25 basis points, largely to the expectation of the markets, bringing the headline cash rate down to 3%. So the announcement itself did lead to some Kiwi weakness, although it was relatively contained given that the rate cut was largely priced in prior to the announcement. But I did want to highlight, though, that we did see some heavy selling on the Kiwi following comments from the RBNZ governor following the announcement, where they did mention a 50 basis point cut was discussed. So this did lead to some Kiwi weakness across the board. The biggest moves coming down against the euro and the USD, although the USD Kiwi movements did reverse towards the tail end of the week following some comments from Fed Chair Powell. Okay, so then moving into the CPI. So Canadian CPI came out as expected, didn't really move the loonie a huge amount, but I did want to focus on the UK CPI data, which did come out higher than expected, 3.8% against 3.7% expected. So this did come in higher than expected for the fourth consecutive print, which did highlight that the inflationary pressures in the UK are still going. I read an article by Investing Live's Giuseppe Della Motta, who suggested that in hindsight, the Bank of England probably shouldn't have cut the rates at the previous meeting, and did suggest that we could see a period of rates holding following. So off the back of the announcement, we did see the pound initially rally before returning back to its pre-CPI levels. And the higher than expected CPI did actually lead to a rally on the UK FTSE 100, which closed the week at an all-time high, which we will discuss a little bit on later. However, I did also just want to note for the UK, we did see some comments from the Bank of England Governor Bailey over the weekend, which did warn that the UK is facing some acute challenges to boost the growth, citing weaker productivity and a declining labour market participation. So the Bank of England has actually cut the UK's forecasted growth to 1%, which Bailey says leaves the UK vulnerable to inflation risks. So from what I'm taking that, reading between the lines, I think we're going to be seeing a period of rates held. With the inflation data also was expressed in the PMI data, which did come out mixed for the UK. But then we move on to the US PMI data, which did come in hotter than expected.
yeah. I think touching on what you said, Ollie, like all the central banks are having a similar sort of theme. So throughout the week, we also were looking at really the FOMC minutes that came from the US. So that basically looks at what the sort of data points to with the July decision. So a lot of the sort of posts out of those minutes was really expectations of inflation to rise, the sort of time taken for tariffs to be actually felt, as well as that not all the data was filtering through correctly from the tariffs because of all the front loading that occurred well before the tariffs, which we spoke to previously. Interesting, during the week, we also saw that there were three Federal Reserve officials, which actually expressed hawkish concerns around inflation, and that from their opinion, there was much more needed to do, especially to control inflation after all the sort of PPI numbers that we saw the previous week. So a lot of the week was really leading up to the Jackson Hole Symposium. So that's where basically the central banks or as well as economics actually gathered together. So globally, and we we're expecting Jerome Powell to speak, so the US Fed chair. So from that speech, it happened at 12 a.m. Sydney time. So definitely would have had a by Saturday morning. I was pretty tired, to be honest, after seeing that speech. But really, Powell actually surprised probably most of the market. So it was actually more dovish than expected, so weaker than we expected. So it was a almost contradicting what other Federal Reserve officials said during the week. That they were more standoffish and thinking about a hold. But Powell's basically alluded to potentially 25 basis interest rate cut in September. The concerns he did mention was similar to what the RBA mentioned around the concerns around economic growth and productivity. While the quotes that a lot of the traders really looked at and really focused on was basically said when referring to the dual mandate of inflation and employment, he basically quoted, "In the near term, risk to inflations are tilted to the upside, and risk to the employment to the downside," which is a challenging situation. So, all the central bank, basically, most of their sort of mandate is trying to control both. But he's basically saying that both going, opposite ways of the equation. The other note they did mention was, nevertheless, with policy in restricted territory, the baseline outlook and the shifting balance of risks may warrant adjusting of our policy stance. So that basically inferred to a lot of traders that instead of inflation, it's more drifting towards the employment situation. While the other sort of factor you mentioned was that the effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. So this sort of language would have seen gold basically surge up by 1%. So I saw the gold prices just instantly went up within a matter of minutes, which also led to a lot of the small cap stocks. So, for example, the Russell 2000 went up by 3.86%. And this was because of the easing. So, because of the price, the expected September price interest rate cut, we're looking at people kind of going out of the Mag 7 into smaller caps because of the easing of the pricing cycle. However, we did also see an article out of Bank of America warning that the Federal Reserve risks committing to a policy could be a mistake if they do actually cut the rates next month. So it is one of those pivotal times and pretty concerning to like it's one of those challenging times for the Fed. So we'll see how that eventuates. We also did see in regards to Trump as well as one of the Fed members, Lisa Cook. So there was some talks about that during the week, as well as the Russia-Ukraine ceasefire talks. There wasn't too much developments on that last week. While we also saw other all-time highs, and we'll be touching on one of the ones, especially the Dow 30, a little bit later in the technicals.
So easy, right? And then moving into the week ahead, starting off, we've got a UK bank holiday today, which I think, Steve, you've spoken about in one of the Q&As in a previous video. We are expecting a little bit of an impact on that, with less liquidity in the market. But next on, we had the RBA monetary policy minutes. What do we see from that one, Steve?
Yeah, it's a good point actually, Ollie, that you mentioned about the low liquidity with the UK, for example. So it would have been pretty much towards the end of their session or mid towards the end when Jerome Powell actually spoke. So we could see quite significant of volatility because of the less liquidity in the markets. But looking at the RBA monetary policy minutes, it'll be interesting to see with Governor Michelle Bullock and how she actually mentions about the productivity. So the concerns about the wage growth, as well as not being able to sustain productivity over that 2% range. So those economic concerns should probably highlight a bit more, bring a little bit more color, and that was really what a lot of reporters were actually asking about in those. But yeah, we do also have the Aussie CPI, and what do you think? Well, actually, I personally think it's going to be probably as expected. What are your thoughts, Ollie?
Well, personally, I do reckon it's going to be higher. So I saw a quote from a senior economist at Westpac, Justin Smirk, who is expecting the monthly CPI to come in a lot higher than expected, or notably higher than expected, with the main contributor being an anticipated 6% rise in electricity prices, which, Steve, I know you're experiencing firsthand at the moment, which has largely been driven by the unwinding of the cost of living rebates going out from the government. So, previous comments from Michelle Bullock did mention that future RBA decisions are very dependent on the data, namely being inflation and employment. And if this inflation does come out higher, which seems like the same economists at Westpac are predicting, then we could see this increase the likelihood of a rate hold at November. Like we previously discussed, that all four of the big banks are currently forecasting a rate cut in November. But I do think, based on the CPI data, would increase the likelihood of a rate cut at November, as I mentioned, which could lead to some buying on the Aussie as a result. Specifically on the AUD USD pricing, we've seen it's been trading between a range of about 64 cents to 66 cents since late May, and it's currently sitting in the middle of this range, where personally I do think the data will come in higher than expected. So I'm expecting some Aussie strength in the short term. But for all of our Aussie dollar traders, the other focus, which we will need to be keeping a note on, is the China PMI data, which comes out over the weekend.
Yeah, that's a really good point when it comes to the Aussie. Considering that the CPI numbers, if it does come up higher, you'd expect it to go a bit further. There was a lot of movement also once Powell spoke. So it basically looked at the sort of support at that 64 level and really shot up and touched that 65. So it was a significant jump. Obviously, the US dollar had a steep decline as well. But especially those figures, the manufacturing coming out of China, if it's higher, like as if like it's forecasted at the moment, it should see that sort of strength in the Aussie. While we do also have a lot of US data, which is going to really come out and actually see whether that sort of dovish tone is actually showing in the economic data, which could also push the US dollar further down and also lead to the Aussie increasing. So it's going to be interesting to see how that data transforms in. But yeah, we'll obviously wait this week. We also saw just a headline a little bit earlier today in regards to the Russia-Ukraine, which, it's quite, I guess, could be alarming, considering that there could be talks that there's no real progress in those sort of talks. So Trump was alluding to potentially a meeting between Putin and Zelensky around a ceasefire, but maybe that there's no outcome in that. So it'll be interesting to see if there's more headlines overnight or even throughout the week around that.
Well, let's see how that impacts on the safe haven currencies. We know they do love to see a little bit of a conflict over now and again.
That's correct.
Okay, so let's move it into the technical corner. Let me just share my screen with everyone just here. I've been told by the guy who sets up the technical side for these videos to take my time on this to beat any lag. So bear with me for the comments on here. Okay. So starting off on your screen, you guys will be able to see on the pound against the yen on the monthly chart here. I've by this purple box here, a range which markets seem to have been quite respectful of, dating back since early last year in Feb. So we can see it did break above towards middle of last year and quickly traded back into the range where it has been quite respectful of this range. We've seen a few times try to break down below as well as break above, but it has failed to really hold on that sort of level. So if we move this into the weekly now, get a bit of a better understand of where we're sitting. I am seeing the price is currently a bit overextended from its moving averages, which historically when we have seen it has been met with a bit of a pullback on the price to move back down. But I think where the price is sitting now is quite a interesting or a bit of a pivotal moment for in terms of where the prices are going to go next. So I've highlighted up here by this blue line as well as the top of the range around the 199.5 sort of mark as a historically significant resistance price. So we've seen on multiple occasions throughout the last year, but a bit over last year, that has tried to move up above, failed to hold, and has since traded back into the range. Most specifically, recently, we've seen this on about 5, 6 different occasions where it's tried to test this upper range, failed to close above, and has moved back down. If we move this into the daily, we get a little bit of a better idea of what we might be looking at in the short term. So for the day so far, we have started off quite positively, and I'm looking at this thinking that it is going to try and test this upper price on the range again around the 199.5. It's also supported, I think, by our RSI, which looks like it is primed to a crossover at some point, which would be a signal of buying momentum. So I think for where the price is now, I think if we do see it break above its resistance price here, it could go on to challenge a psychologically significant price point around 200. If we see a number of consecutive positive closes above this price point, we could see it start to move further towards maybe some more significant, psychologically significant price points. However, I do think if it does move above this price, fail to hold and trades back into the range, I think it will come down a bit further towards its moving averages. So I think for the moment, it is in a bit of a 50-50, a bit of a standoff point. So I'm looking for signals of either buying or selling momentum. I want to see how it interacts with the psychologically significant price point. If it can break above, come back down, use this as a support, we could be looking at some buying opportunities on there. So the next market I wanted to look at was on the Dow Jones 30. So I'll move this back into the weekly chart. So you get a bit of a holistic view of what we're looking at. So on the weekly for the Dow, on the purple box here, you can see I've highlighted a bit of a range where it looks like we have been trading quite respectfully of this range since September last year. We did see a drop down, obviously, with all the tariff announcements did come up, and it has since traded back up, and we can see a pretty strong upwards channel just here on the grey box. So I'm looking to see if we are going to be challenging for new all-time highs, which were realized on Friday, or if we are looking for a bit of a pullback on the price before a continuation. So if we move this into the daily chart now, get a bit of a better understanding of what we're looking at. So I've highlighted on the upper level of this range is at the 45, just shy of 45.1. So a price point. We see it did touch on this price towards the middle of August and it was steadily trading down. We did see a couple moves above, but it failed to consolidate and it did trade down. But then on Friday, following the dovish comments from Jerome Powell, we saw a significant jump up. Personally, I'm looking at this as a somewhat overbought market, so I am anticipating a slight pullback on the price. And I think depending on how it interacts with this this upper level of the range, I think will be a bit of an indication for where we could be looking to go to. So if I move into the 4-hourly chart now, this also does reaffirm my take on a bit of an overbought market. We can see on the RSI it has drifted into the overbought area, which historically has led to a bit of a pullback on the price, most recently in the middle of February here, where it did break below. So for prices now, I'm looking for the prices to pull back. If we do find a support at its previous highs or its previous all-time highs around the 45.3 sort of mark, we do find support there and continue upwards, I'll take this as a signal of buying momentum. Otherwise, if we do see a break below back into this range, it will show that we are looking for a bit of a consolidation. Could be looking for selling opportunities as we move back further down. Okay, so that brings us to the end of the technicals for today. So moving into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from the week prior. So Steve, did you want to take it away with question 1?
Yes, so the first question was, why is Trump attempting to remove US Fed Governor Lisa Cook? So basically, Lisa Cook is is part of the Fed. She was a Biden appointee, so Biden appointed her. And basically, what he's actually trying to claim is that she's actually declared two primary residences as her actual property. So in America, you can only actually claim one. So what Trump is actually trying to do is basically remove her and then replace with his own preferred candidate. So this leads into the argument that we've discussed previously about Fed independence. So we've seen that Trump's previously tried to remove Powell. He now knows that he can't do that. So basically, it's going to be waiting for the term May 2026. But if he is successful with removing Lisa Cook because of this, and actually appointing someone who's on his like his preferred policy, and he's really looking at reducing interest rates, then it's going to really have a bit of a impact when it comes to markets as well as probably the US dollar. With Trump, he does have a sort of preference to get interest rates reduced because it's going to help when it comes to reducing the debt interest. And that's, yeah, it's an interesting one. But yeah, we'll see how that eventuates.
Thank you, Steve. And for question 2, I wanted to put a bit of a spotlight on the monetary policy minutes, given that this week ahead we do have the RBA minutes coming out. So, question is, why do the monetary policy minutes move the markets? So, as we know, interest rates are what drive currency flows. So, any information or data from the minutes which changes market expectations around future rate moves will in turn lead to movements in the currency strength. So, taking for example last week's FOMC minutes, which Steve mentioned highlighted the ongoing inflation risk, which historically will increase the likelihood of a rate hold and strengthen the currency as a result, which we did see last week on the USD as it did move higher against the pound, Aussie, and the euro. Okay, so that brings us to the end of the video today. A recording of this video will be uploaded on YouTube following the end of the video, as well as in the VIP chat room and in our Telegram group. For anyone who is looking to get involved with a bit more of the Monday Open, please jump into the VIP chat room and start a discussion with Steve or I. We're posting in there a lot every week, a lot of articles regarding the markets, market pricing, alongside a number of analysts from the Everest Fortune Group. And that's all from me. Thank you very much, everyone, for watching. I'll catch you later, Steve.
Thank you, everyone. Enjoy your afternoon.